Hey everybody, we are here with Ian again. So I'm always happy to have Ian on. It's someone we chat a lot about commodities and markets in general. And this week's commodity report, I was like, I wanted to talk specifically about commodities in a separate report to my weekly report. And I mentioned that, and I was like, you know what? Ian's gonna come on. We're gonna just do this with Ian today. So how are you doing, Ian?
I'm doing excellent. Thanks for having me on, man. Good to see you.
Of course, man. Good to see you too. It's been a little bit since we've done this, so it's awesome to have you on. And one thing I just wanted to chat about first, and we were kind of talking about this off mic for a second, and it's the idea of leverage. And so, for example, when we're talking about leverage, we mean that when you're in futures, when you're in options, you can basically get a lot more for your money. So, for example, if I'm, if I have $100,000 and I'm trading and I take a position in, let's say, the NASDAQ, and I trade, $500,000 in it because I'm using futures, then,
Mhm.
a wobble of 20% could wipe out my entire account. So
Yeah.
we have to understand what we're doing when we're using things like leverage. I don't even think, like, for myself, I really don't use much leverage. It's 1.1 most of the time. So I'm barely over leveraged most of the time in most of my positions. I suggest people use less than leverage at the beginning. Basically go zero point 0.7, 0.75, probably the easiest way to learn until you're comfortable with it, because the amount of leverage you're using can wipe out your account very easily. And I see this happen a lot, especially with options. Everybody, when they start trading, they have an options trade that made some money and they go, oh, I made some money in this options trade. So then they start to go very heavily into whatever the options trade is. And they're buying options here and there. And they're like, whatever their account is, let's say it's a 100K account, just to make it an easy number, or 10K, whatever you want. And they're going to throw 100% into that options trade. And like, if you're doing that, basically you're talking, and those options, you see people all the time, they go up 100%, they go down 50, so basically you're talking about, you can wipe out your account very easily with one just going worthless. So we have to be very aware of it. And that's why I think, if you're learning how to trade, use the ETFs, stay out of futures products at first. But then once you're using futures products, keep in mind, and also you can start right with them, but you have to understand that you have to stay away from leverage. It just hurts people. It hurts people badly, and it's something to just understand. It's great when you're trading so many different products like what I do. If you're trading 20, 30 different commodities, you have a larger account. It's great because I never really get into a point where I'm like, oh, I can't buy anything. I don't have any
Right.
cash left. So I'm always at a position where I can always put on a new position, be ready for the next trade, and so on. However, if you're just trading, something normal, you don't need it, especially if you have a very small account, you can wipe out your account very easily. Yeah, so I have a subscriber of mine that's a friend of mine who's running in the same thing. He has a smaller account and he's trying to understand how exactly is he going to put this account together the right way. How is he going to take trade? And he asked me a question, some of these contracts are too big for me. So how do I trade those contracts? And I said, just don't. Just
Yeah.
simply don't. Like, you have Palladium. Palladium's a huge
Right.
contract.
That's
It's
what I
two
was thinking
hundred
about.
thousand dollars. Yeah, it's $200,000 contract. When I first started with my accounts, like, I couldn't trade it. It took many years before I could even trade that account. And
Mhm.
that's okay. Just understand that you can't trade size like that. So that's just a quick disclaimer I wanted to say because it's something that's been coming up lately. And
Yeah.
now
Use
we
the mic.
got,
There's lots of micro contracts.
yes,
Not
good
even the mini
point.
ones, the micro ones. There's some really small contracts out there. Like if you think about even some of the ags,
Yes,
defining your risk in some of these ag contracts. I mean, say yeah, your trading unit's $100,000. I'd only be
yes.
trading one contract of corn um, per trading unit, one of the big ones. So yeah, I mean, use the micro contracts.
Yes, exactly. And there's CFDs and all types of stuff. So make sure you're understanding these things. So we're going to jump right into the charts now. So we've got the Qs here right now. We got the weekly
Mhm.
chart. This is a simple trend model that I have on here. So basically what we saw is we never really broke down. I kept mentioning that basically my breakdown signal and my stop loss was literally right under the lows. And we finally hit it. And
Hmm.
we literally went from that point and then we hit that down point too. So now we're actually short the Qs. So this is how that happens. So if you're paying attention, you're going, how exactly do we get long to short? We're basically seeing that the breakdown signal to get neutral hit, and then a day later, the next signal hit. So all that kind of coming into play is really taking the Qs into a short position. The market isn't looking very healthy right now. There's a lot of people who keep talking about this being a bull market, and it's like, I know enough to know, and you know enough to know that a bull market usually isn't held up by a few stocks. And everybody wants to say there's the New York Stock Exchange and this stuff. Well, we're just talking mainly about the S&P 500. And most of the time we see this led by a good bull market. Small caps start catching up or they lead on the way up, something. We just haven't seen any of that this time. So this was a very thin rally. I've talked about being cautious about it this whole time. The only equity position we really had left was the Qs. And once the Qs broke down, that's it. So what are you seeing here, Ian? What are you thinking about the market at the moment?
I'm seeing a lot of weakness out there. Similar to the Qs, looking at the December contract, the S&P 500,
Mm,
the E-mini. I mean, that's such a clean breakdown. Uh, Head and shoulders top breaks down. You get that retest, and it's continuing lower. And it took out a 4,200 level yesterday, and it's really come off. So I'm seeing a lot of weakness at the index level for equities. Rates are continuing to rise. A lot of the intermarket ratio that were in place last year as rates rose. We're talking small caps underperforming larger caps, IWM versus SPY is catching lower. That's what we saw last year as the 10-year ripped higher. Credit spreads really not doing too much,
hmm
kind of just chopping sideways. I mean, that was the same situation we were in last year. That was one of the things kept pointing to, hey, credit spreads aren't blowing out. There's really no need for concern. What do we get? We got an epic sell-off in bonds, and bonds continue to roll over. TIP IEF, treasuries, tips versus treasuries, and a way that I like to measure inflation expectations. It's ripping higher along with yields. So I'm just seeing a lot of the same stuff as 2022. Doesn't mean it's going to play out the same way. There's just a lot of similarities. So it's sketchy out there. It's sketchy out there. So I mean, like you said, the
yeah.
Qs are short. Qs are short. I think SP 500 is short.
Yes, and I think the thing is, you see so many arguments back and forth, and it's really like, for me, trading is a very simple thing. Some things are short, some things are long, price action is price action. I'm not sitting here fighting this stuff, like to me, like I'm gonna sit here and go, okay, like I got a good trade out of it, call it a day, we're get long right here, we're out here very happy. That's a great trade. Like you're not going to hit them all perfectly. There's no such thing as catching a perfect bottom and a perfect top.
Yeah.
But when you got a good trend model and you can go, okay, well, I did get this finally getting that close at that level and on a daily close here, and then breaking down, got neutral around here, get short around here, call it a day. It's on to the next trade. And like you said, another thing that we've been short forever, and you still also had the stance that was really good the whole time, which was that you were short it. You had a lot of people talking against you in general, but you continued to
Mhm.
kind of hold on to the idea that hey, this trend is down in
Yeah.
bonds. And if we look at TLT and just this trend model of what happened recently, it came all the way down. Finally, I got a neutral signal after forever. We were short the bonds at that point, and most people who've been following me for a while know this. From 2020 on, we were short the bonds until this point here, and that's at the end of 2022. And so then we get neutral bonds, and then we get this very short-term buy signal that just barely came in. We get a short-term buy signal, and then that immediately gets stopped here, and then goes neutral, and then goes right back to short again.
Yeah.
And so for me, like I know a lot of people want trading to be this simplified thing where I can just say, hey, you're just going to be short forever and make all the money in the world. Really, you don't know when these trends will change. Sure, I could have said, hey, like I really don't think the Fed's going to stop here, and I could have tons of feelings and opinions about it. However, I know 90% of people, and more than that, sorry, because of positioning, actually felt like bonds were going to go up there. Everybody in the world is talking about bonds going up. Bonds can't make a new low. That's the end of it. You're crazy if you think anything different. And really, getting shorted again has been the right trade. And so continuing to just be like, okay, the trend is down. I'm getting a sell signal and executing. Because at the same time, when we look back at this, I know that people will go, oh, I wish I would have got in here and out of here. For me, I'm like, that's a good trade. You have to just make the good trade over and over again. And I know, for example, me being disciplined and getting in and out of things at good points is worth more than just trying to get out of something at a perfect point. I could have got out of it here, and people who've been following me for a while know I've been kind of bearish fundamentally in thinking and in my thought process on the NASDAQ all year long. But I know that the price action told me I was wrong. And so we end up getting long the NASDAQ. We end up having a good trade in the NASDAQ. And then it comes back, and now we just have this good trade that just worked out well. There's nothing besides that. That's all you have to think about when you're doing these trades, which is, how do I execute my game plan? How do I do that again and again and again? Sometimes you get this type of situation where you made a good trade, comes back, you lose a little bit of money. That sometimes will happen. But then there's also other situations where, it just that was a good long process of a trade there. So, you can't just sit there and go, I know this will happen, so I'm going to trade this way or do this in this way. You have to figure out a way to follow your system and follow your plan.
Yep, that's
So
what it's all about. Being able to look back at your trades and know that you would take a similar action again in the future.
yes. So next chart, Ian, what are you thinking about energy right now? I know this is something that you and I talk about quite a bit. The energy sector has looked very interesting. It's been one of the better sectors this year so far now. It's actually held up much better than everything else. What are you seeing in the energy space?
We had a little bit of strength in some individual names in recent weeks, but overall, nothing too exciting from like oil and gas names. Uranium is definitely perked up. But in terms of energy, I mean, it has a lot to do. XLE has a lot of work to do. There's still a lot of overhead supply. And the way the overall market's looking right now, I mean, it's hard to want to get long energy more broadly until we see a breakout. I mean, it's looking like messy for longer. I can see a scenario where the S&P 500 continues to fall, the Dow's breaking down, small caps continue to roll over, while energy just hangs tough. While it remains resilient, but doesn't really break out and start ripping higher.
And that's also been the theme of the year, like in the last couple of years. The energy has been resilient. Like it made this top here in 22, and it just went sideways the whole time. And most of the time, that type of sector, and I've seen this a million times, the sector that barely has a real pullback and doesn't get hit that hard is usually the leader next time.
Yeah.
However, like you said, it's sitting under major resistance. Under this major resistance, it's kind of hanging out. the market, liquidity wise, is in a tough place. This is why in the last few letters I've talked about being cautious and I've raised cash. And you also will notice there's a lot less positions on there than I usually have. Most of the time, the reason in that is that the market isn't going to move like you want it to move in this type of an environment. Up or down, most of the time it's just going to be really choppy and
Yeah.
boring and drive you crazy. So, there's also okay, like some of you guys are individual traders. You do not trade a fund like I do. So it's also okay to turn off all your positions and walk away for a year. Like you can
Yeah.
do that. That's also fine because our whole goal here is to keep capital, keep our capital rolling. Find some high yielding instruments. You get paid 5, 10% just sitting your money in random places at this point.
Yeah.
Go put your money in some of those, walk away until the environment changes. That's also an option because the main goal is protecting your capital. But looking at it here and going, okay, well, energy is holding up. It's okay. So we also need to take a look at how's crude looking. So we look at crude. Oh yeah, I forgot. There's a I think it's because of that one that happened in April of 2020. I think that contract just went away because
Yeah.
it's just so nasty. But here it is. So here's crude, and we're seeing the same type of thing. It's holding up well. It's not really breaking over some major resistance. It's kind of just sitting there, chopping around. So far, it was a good trade. We got a good entry point for this. It went up a lot. It's come back. We'll see where it ends up. So far, it's a profitable trade. And really, like, all I'm looking for is profitable trades. I can't tell you when things are going to stop. I don't try to predict when things are going to stop. I just go, okay, it's a profitable trade. And once again, our stops here. So from an entry about this point to here, now we're profitable. If it keeps going up, great. I can be long that. But still, I know the environment we're in. So I'm not expecting much. I'm not going to push harder. I'm not going to add to positions. I'm not going to
Yeah.
take a bunch of crazy positions. I'm just going to sit there and kind of watch it.
Mhm. That's crucial to understand. I mean, you have to have a trading plan, right? But you also understand the environment that you're trading in.
Yes.
Uh, and with that understanding and a solid plan rooted in risk management, I mean, definitely an improved probability of success.
And trust me, at the end of the year, and I'm sure it's like a lot of people probably don't want to pay too much attention to trading right now. It's not very fun. It's very hard to do at the moment.
Yeah.
People want people who have sure things, but really, sometimes the plan is waiting, preserving your capital, sitting on the sidelines, and then you can come back and hit some major trades at some point. Know the environment too. As a trend trader, I know that most of the trends right now are going to be choppy. They're going to be hard to trade. So I need to be I need to observe this and also have smaller position size. Be ready for these pullbacks. Understand that it's not just going to continue up every day. So whatever it is, be willing to go long, be willing to go short. The bond short has made a lot of money. Some of the currency shorts made some money too. Like it's just you have to be willing to be in all these different areas to put on these trades at the moment. And next chart is uranium. Out of all the trades that should fall on their head, that I would have expected to fall on its head in this type of environment, uranium is surprising me here. You
Yes.
know, I literally, I looked at it. Our exit's right about here. It was a good entry. We got a good entry point, great band squeeze breakout, one of my favorite trading models, and comes back here. Thought it was just going to break down and it starts to move back up again. What are you seeing on this uranium chart, Ian?
I've seen a breakout from a continuation pattern,
Mm-hmm.
and it's holding up, and now, I mean, this is a weekly chart. We're seeing just a nice tight consolidation within a new uptrend here. That is what I'm seeing. I'm seeing individual names uh really catching a bid. Still some overhead supply out there. We could talk about and highlight those pivot highs. Oh, this is a great one, Cameco.
Mhm.
I like Cameco back up towards 50, I think 55
Yep.
is my target in Cameco right now. But there's other names as well. I think Next Gen Energy, I believe,
Yep.
NXE,
Next gen.
and it looks really good. I mean, there's still some serious overhead supply in NXE. It's working on it.
Yeah.
Definitely a nice rally off of those spring lows here. But yeah, uranium's just it's one of the outliers right now. And if and when the rest of the market gets in gear and starts to resolve higher, I think these names will lead the way.
Yeah, and I remember seeing like things, there's uranium stocks. I'm trying to go back further to show you guys something. But if we look at this is a quarterly chart of Cameco. So if we
Mhm.
look at this, you also see like so uranium sometimes really does buck the trend of the market. This is during if you look at the S&P 500 during this time, it's underwater. It's basically the dot-com crash starts here. So the
Mhm.
market's coming down as uranium's bottoming and starting to move up. So sometimes it can really buck the trends. This is why I also like it as a diversifying product in your portfolio, because it's going to give you diversification. Most of the things in the ETF stock space don't give you the same diversification similar to futures, but uranium does. So you can be in a position here and like, this did a great rally during that commodity cycle that happened from 2000 to 2008. And then it came down for many, many years. We had Fukushima here and a bunch of things that happened. I think Fukushima was more here, but we had a bunch of, I think it was 2011, but we had a bunch of things that happened, kind of gave it weight the other way. And bottoms in 2020, and it's gone up ever since. So we can see if we make new all-time highs or whatever. But so far, this has been a great trend. And that's really what we want to be a part of. We want to be a part of good trends.
What's it all about?
Yeah. So getting to gold. So how about this one? Gold, just what a fake out, It's recently just
Yeah.
along again, and that's another thing I wanted to say to people this week. We do have gold back in the long part of the portfolio. A little bastard went straight down, finally got me out of my position. Once again, the stop was right around here. And then it
Mhm.
reverses, gave me a gap, bought the gap, and here we are today. So, what do you guys think about? What are you thinking about gold here, Ian? Gold, silver, all of these things are actually doing a lot better than the market, even in this choppy environment. I'm not long silver yet. Silver was a short for like 3 days and then stopped me out. So, what are you thinking about gold and silver and precious metals right here, Ian?
You know, price is king. That's the way I approach markets. It's the way that's my big philosophical kind of outlook on markets. So I have to put price first.
Yes.
And when doing that, I think precious metals look good.
Yes.
Precious metals look really good. That those former 2011 highs for gold was around 1923 gold futures. That's been my level. Um, so as long as gold's above those former 2011 highs, I like it long. I got to give just gold and the overall precious metal space the benefit of the doubt. Um, Again, still plenty of overhead supply at those former all-time highs around 2089. But I look at this chart and I see a potential inverted head and shoulders. And I just, given the overall market environment, if I just wanted to hang my hat on dollar and rates, I have a pretty bearish outlook on gold right now
Mm-hmm.
and silver, but that's just not what price is. That's just not what the market's showing me. So I got to go with price. I got to go with the potential failed breakdowns in gold and silver.
Mm-hmm.
Um, and looking for opportunities even in the mining space to start getting long.
Yes, and looking at this, our two different portfolios. The swing trading portfolio is different. We get long and short things all the time, but the
Mhm.
long-term portfolio, we've continued to stay long gold, silver, even Bitcoin stayed along, even when it gave a breakdown signal in the futures portfolio. So I've always thought, gold is here would be a great time to own it, have it. I think it's going to break out at some point just because it's held up so well in the environment that it
Yeah.
shouldn't hold up well in.
Yep.
That tells, like you said, price is king. I fully believe that as well. And watching this sit here under this zone, the only thing I would suggest is not getting too overboard on this right now.
Yeah.
Wait for a possible opportunity because, yeah, we can all get long in. And once again, it's a failed breakdown signal. We talk about that. The way my models work, if it's over a certain amount of days, it's a failed breakout signal, and I have to take it.
Mm.
But if you're also just trading and you're looking for a new position in it, there's nothing wrong with waiting for it to clear that 2070 level on spot.
Yeah.
If it clears that level and clears all this major resistance, that's major resistance. It's not something you want to mess with. If it
Mm-hmm.
clears all of that, it's blue skies up there. We don't know where it can go. So once again, it's the boring thing to say, which is it's also good to sit on your hands.
Mm-hmm.
Nothing's wrong with sitting on your hands for a little bit. So feel free to sit on your hands, wait for a possible opportunity. And most of the time, these usually come back to that zone, wherever that high volume zone is.
Yeah.
Most of the time, these come back. We'll take a look at that and figure that out here. So that high volume zone, if we look at it, oh, it's not even going to tell me because I'm on a weekly. So here we go on the daily. So the high volume zone is right here. We're
There you go.
seeing the highest volume bar.
That makes sense to me.
Most of the time, we will come back to that zone. So if you are looking for that pullback entry, if you're that type of a trader, nothing wrong with being that way. Just understand what you do, and boom, there it is. You get under that 1940 zone, then you
Mm-hmm.
buy there. And
Mm-hmm.
also, you could trade it a couple ways. Maybe it comes back to this level, and you just trade the range. Maybe you short it back. Maybe you're very short term and you short it back to the range. I know there's a couple traders who are on there on my page who follow me who are very short term, very good at it. Mercia talking about you coming back down here to this level and then bouncing. That's a way you could trade it too, both long and short. Whatever you want to do. But I also am very constructive on precious metals, but they'd have to finally get this breakout that I've been waiting for forever, that I keep talking about and looking stupid every single time. Like it's
Yeah.
gonna happen this time, and then it never does. And it's like, every time, every time. So let's go to
I'm just still
Bitcoin next.
impressed. I'm just still so impressed. I'm also really impressed with Bitcoin.
Yes.
Um, and I'm not quite sure how to. I'm really interested to see what you're thinking here, because I think of Bitcoin as like the ultimate risk asset.
And it's not
Uh,
making any sense. Yes, I know. I'm right with
right.
you.
So it's like, okay, so Bitcoin's ripping higher. How long can Bitcoin rip higher in the S&P 500 catch down to new lows before one of them decides to turn and join the other?
So Bitcoin to me has always been this way of seeing liquidity, right? Like how much risk on is there in the market? How much liquidity is out there? Are people just throwing money at the wall? And usually it's if I'm in a tight liquidity situation, Bitcoin is not doing this. Like I've never seen it actually in all my trading. And people, I had a friend of mine tell me, oh, it's because of this. Oh, it's they're pumping it to get out of it. Oh, they made a fake thing about the ETF. I don't really know. All I know is that the price action is doing this. And yes, there are manipulations in markets. You can pump things. However, they don't usually hold up longer than a day or two.
Yeah.
This is if this sustains the breakout, that's going to be a very interesting trade. It just has to sustain here. Not get back. If it sustains over 30,000, I'm very bullish on it. I think
Mm-hmm.
it's a very simple trade right now with very tight risk. is having this trade here. Either, waiting, if you want to wait for a pullback, I don't know if it's going to happen. I can't tell you that, but you could wait for a pullback to support. You could buy here. You have a stop right under that 30,000 level. I think that's a very simple way to have a very low risk entry to this trade. Because there's two things. It's one, either this is telling us that something's different about this market. The market is doing better than everybody really thinks, and these breakdowns in the market are going to be failed breakdowns. I don't look at it like that. And once again, you guys have seen, like I can't think like that, because that would mean I wouldn't take signals. So I'm taking my other signals. I'm still short the NASDAQ at the moment. And I'm ready for this to turn down. But also I'm long this, but also what does that do to my portfolio? That protects my portfolio. That makes me in a position where, let's say this just falls on its head. Well, my other positions will start making a lot of money. So this is why I like being long and short things. This is why I like the idea of diversification. People don't understand that, and they go, oh, well, that one trade was a loser that you had. Like, I don't put 100% of my money into any trade. I could have 20 trades on at a time. And like I usually post, you guys see it. I don't hide that. I have lots of trades on at a time. And some are winners, some are losers. But once again, if we're all running the rule of that, I'm only going to lose 1% on each of my losing trades. And then my winners can gain however much, now I have an asymmetric return. I have a way of doing that over and over again. And that diversification also means that probably all, and that's also the important thing to know. If you are a trader, and I see there's people out there that say that they have 80%, 90% win rates. That's all bullshit, by the way. Yeah. There's no person in the world who has that. Even Druckenmiller and Soros talk about winning 40% of the time. Nobody does that. So if you're a normal trader and you know that you're going to lose money sometimes, you have to understand that the diversification, the risk management is really everything. It's not about what I say, like, oh, this is great. It's my systems give me the discipline to execute these things over and over again without getting out of those parameters of losing 1%, and without saying, hey, I made some money on this trade, I'm just going to get out of it. I'm looking for those outlying returns. I'm looking for that huge trend I showed you guys in the NASDAQ earlier that went on for years, or possibly Bitcoin 2017 or Bitcoin 2020. Whatever it is, those are the real trades I'm really, really looking for, and those are the outliers that pay for all the little losses. But once again, like if you're only losing 1%, and let's say you only get 20% of your trades right, you can still make money. You could be wrong 5 times in a row and get one trade that's right that makes 5%, and then you're okay. You've made a good return. That might sound crazy to some people, but really look that up and try to understand like your discipline in that one thing, and you will be a great trader. If not, you will blow up. Like it's as simple as that. There's no two ways about it. You either trade well like that, use your risk management, or you don't. And I've known people who trade all different types of methods, but the risk management is what has always made them money and kept them making money over time.
Yeah, and going back and reading Jack Schwager's work, the Market Wizards, whichever volume you choose.
Yeah.
You're gonna find that key underlying theme across traders, across asset classes, across strategies, and it's all risk management. And it's interesting, the stories are really interesting because you get a window into how these stellar traders found their strategies that best fit their personalities. But it's all about risk management. Which is key, right?
Yes. And yeah, and risk management is just everything. And speaking of diversification, we talked about this one a little bit earlier. So when we look at live cattle, like that's one that we can kind of look at here and go like, that's another thing of going, wow, that's a trend, like that's a major trend. And these are the things when we're talking about outliers, this is an outlier trade. where people, every year you see something, and I don't care what year it is, you see something in some market that's just not turning around.
Right.
Looking at live cattle, this is a major trend. It's the trend of the year, really. This has been a trend since late 22 all the way to now. And you've basically had to sit on your hands. Yes, there's pullbacks. Yes, it's not pretty every single day, but you've got this trade that just continues. Another trade that's, people don't hear about much. I don't even know if it has the ticker on here. I was gonna look at OJ, but
Oh yeah.
oh, but I don't think the
I've been
ticker
getting a
even
lot of
exists on
questions
there.
about OJ. I think is it FCJ?
FCJ on here.
FOCJ? Try FOCJ.
I
No.
don't think it's on. It might not be on this one. I know it's on um, Trading View only because that's oh good. I'm not gonna sign in.
I was actually just talking about OJ a couple hours ago. I mean, talk about a parabolic move.
Yeah. So if we're
Um,
talking about a major move, OJ is the one. Like if we're looking at OJ and we're talking about outliers, like, OJ, was that a 1 month? Is it just oh
there we go.
it's just that large of a move. Wow.
Yeah.
So OJ, here's a monthly chart of OJ, and talking about a parabolic move, these are the reasons why in futures we diversify. And people go like, I would trade for funds, and they'd be like, "Wow, you trade every product," like, and it's like, yes, I do, because this is what happens sometimes, and these are the outliers that we're talking about, like this is the entry point. Like, yes, it's a monthly chart, but this is a 100 or 200-day high, 150-day high. No matter what model you have, you would have probably got long around this point. Your trailing stop would be here, and you just continue to run this. Like, that's a wild trade, but these are the outliers that we're talking about. So
Yeah.
when you're looking for these outliers, yes, you're going to have trades that are choppy. You're going to have trades that give a little bit back. But once again, this is like, if I entered here, and let's say the exit ends up coming back, like let's say it just crashes today, which every week I've thought that. Every time I look at the trade, I'm like, it's going to crash any day now. It hasn't. I've been thinking that probably since about this point. So let's say it comes back, we hit that stop point or an exit, whatever, like that's a great trade. So what we're looking for is those outlier trades, not to try to get into something and be like, and outthink yourself and be like, oh, I must get out here because it's gone up a lot. The only way you really catch those trends this way, you can't think about it. There's no fundamental data. I mean, honestly, if I look at my fundamental data, which I do fundamental data, price action is my everything, but I do some. If I look at any fundamental data, I couldn't tell you why orange juice is up here. There's no reason. There's absolutely none.
Everyone's telling me it has to do with the crop. The crop's diseased. I
Mhm.
think this trend really started to take off when the hurricane hit Central Florida last year.
And yes, sure, I could say it's the hurricane's part of it, sure. Supply and demand's part of it, but honestly, everything I could have added in would have got it to about here. Why it's continued, I have no idea.
Yeah.
Like, yeah, so all the fundamental data I could have added in, a fair price would be about $2. That would have made some sense.
Yeah.
Getting up to where it's at today, no way. It's impossible for it to get up there. So like, once again, it's impossible, but as a trend follower, as my models are set up, and if you talk to any trader, what another thing you hear on what's it called, on the Market Wizards books, they always talk about entering a trade, and once I'm in a trade, I don't get out of it because somebody said something. I don't get out of it because I think something. I get out of it because I predetermined what I was going to do beforehand.
Yes.
That's everything. So like, if you don't agree with my style of trading, which is not what I do this for, I want you to figure out your own style of trading, however you want to do it. But the things you should keep in mind are for yourself is the discipline, and the ability to put on the trade and not do anything while it's on. Just wait for your exit. However you decide that exit beforehand. I don't care if it's fundamental. I don't care if it's technical. I don't care if it's positioning. I don't care if it's based on the moon. I don't care, really. I really don't. Just have it written down beforehand, and I promise you, you'll be a better trader because of it.
Yeah. That's
Now
great
that we went
advice.
through cattle,
That's great
let's
advice. You know, it's funny, like we were just talking earlier before we started to record, and I think cattle's is short. I think cattle's are short, but I'm looking at a completely different time frame. I'm looking at a daily chart, and you know, when you look at a weekly chart, it's hard to this is a continuous contract. I guess I'm
yeah.
looking at the December contract, and as long as it's you know, it holds that gap. It
Oh
holds below the
yeah.
gap from
So I
earlier
mean,
this week.
also that turnaround just happened.
I know today, wasn't today wild?
Yeah, that turnaround just happened.
So we'll see. We'll see. But you were getting ready to get to cocoa. Were you pulling cocoa up?
Yep. Yep.
Okay, now
Cocoa.
this is funny. I gotta rap about cocoa real quick. I was
That's
talking about
pretty
this
looking.
on the morning show earlier this week.
I wonder why that's not like that.
Now
'Cause I just had cocoa up.
I've been thinking about cocoa as a short.
Ooh, that's scary.
Yeah, right. Well, I didn't take it, but you know, and I haven't written about it because you know it's not really my style. Like I'm not into picking bottoms. I'm not into picking tops. But my reasoning is that at 30 was it 37.75 big level, right? Former highs, a lot of overhead supply. It found resistance around that level earlier. Was it last month or earlier this month? And it just seemed like a logical place for price to roll over and correct for a while. There was a 3-peak bearish divergence on the 14-day RSI. And what do we know about momentum divergences? They can
They
work
don't mean
themselves
much.
out. It's just momentum. And like all the indicators, none of them are foolproof.
No, no.
So cocoa rips right through that 37.75 level. Was it yesterday?
Yeah.
And it just it keeps going. And so I look at cocoa now. I'm like, all right, so you know, 5 handle, is that where we're headed? You know, are we going to
I don't
get back
know.
near those former 1977 highs?
And there's
Maybe.
also the possibility that it stops, and falls on its head. There's a bunch of different
Sure.
ways. The one thing, like orange juice, I can say I have no fundamental reason to think it should be up where it's at. That wouldn't make me change my mind, right? Like I'm still
Mm-hmm.
gonna be in the trade. I have my trend model running. That's the end of it. Cocoa, however, I could give you many reasons, and I've been posting those. If you guys
Yeah.
follow
Yeah.
me on Substack, you have to follow my Substack to really pay attention to this stuff. And not to mention, if you have, there's a bunch of free information on there. I put a bunch of free stuff too, so feel free to join my Substack channel. But if you're on that, you see that I constantly have put up this fundamental data behind cocoa, because really the fundamentals for cocoa are still great. It
Yeah.
doesn't even, there's not something that tells me that cocoa is going to stop at some point. Once again, it doesn't matter. The price is king. It's continuing to move. I don't want to do anything with a trade like that. Now, all these other things here, these were posted for a reason. And Ian and I have talked about this before. And I post these to show like how frustrating trading can be at times,
Mm-hmm.
especially as a systematic trader. Here's an entry, here's an exit. So I went back and found all my entries and exits, and I posted this all for everybody. Entry, exit, entry, exit, entry, exit. So like you see this one winner here,
It was a winner. Yeah.
one winner, entry, exit, loser, entry. I must have missed the exit, but that was right there. So that was a loser. Entry, exit, loser, entry, exit, loser, entry, probably flat there and another flat. And here was one, I don't know where the red line went, but it was probably another one that was flat. So all these flat to small losing trades over and over and over again. So frustrating. You know, and most people would say, you know what, I'm taking cocoa out of my portfolio. I'm done with this. But for me, I know that sometimes the most frustrating trades are the ones that actually work out.
Yeah.
And this is from 2017 on. All of these trades like are from 2017 on. It's when I started really keep. What's up?
No, I was going to say from 2016, 2017 on, a
Mhm.
lot of commodities look like this. I
Yes.
mean, it was pretty frustrating in the grain markets too.
Mhm. Well, there was a lot of good
Um,
shorts, though. There was a lot of good shorts that did make money. Cocoa was just this weird sort of uptrending range thing that
yeah.
was just so terrible to trade. Um, and then finally we get this one, and it's, you know, if we lost, let's say, you know, out of all these, let's say 6-7%, because these are all 1% losers. So let's say 7% to make it on the high side. You know, this is gained. I don't even know how much at
Yeah.
this point, you know.
Right.
So this is how you have to look at those trades. I'd have to look at it's all a bunch of different contracts over time because I've had to roll so many times with this trade. But you know, I know that's at least 40% of my account, you know, like, so you lost 7% of your account to gain 40% of your account all in one trade. And who knows exactly where it goes. And so it's basically telling you, like, once again, it's not about like can you win every trade? That's a ridiculous way of looking at trading. It's about coming into it, understanding that you're going to lose a ton of trades, but what are you looking for? What's your style? Do you find outliers? How do you find outliers? And so this is what I do is I try to find these outliers. And another one that we talked about
Can
too
you
is sugar.
can real quick, can you speak to the discipline of taking these trades over and over and over again? You know, you loser, and then you get another loser, and you get a little winner, and then you're flat, and then you take a loser, and you take a loser. But it's sticking with and continuing to chip away and swing at Coco when, man, it's definitely, you know, I mean, we're all human. We're all human, right? So there's some I imagine there's some emotional drawdown somewhere in over those 4 or 5 years.
Yes and no. So for me, I guess it comes to just my major my cornerstone of my personality, I guess would be the best
Yeah.
way to put it, which is, you know, I am very good at things like that. I'm very good at running my head into a wall 50 times to figure something out. You know, like I have that obsessive personality in general where it's like, you know, if I'm shooting a basketball, I need to make like 20 swishes before like I can leave, or like, you know, when I'm riding my bike, like I have to like land this way to do things, you know, like and make sure I'm doing everything perfectly, and like that obsessive personality. And then when I build a system and I go, I really like, I don't tell people to have faith in their trading. Like faith in trading doesn't work. Like faith in like, I think cocoa is going to go up forever from here. Like that's a ridiculous thing to have in your mind. But having faith in your systems, like I know I back tested this, I know I created this system, I know this model works. So I'm going to continue. I know that I'm only losing 1%. I have a ton of other trades that have all made money. You know, especially at this point, that's a November 22 exit. 2020 was a great year for me. 2019 was a great year for me. 2018 was like flat to slightly up. You know, it wasn't one of my best years, but I think it was like a 7% year. You know, it was fine. But you know, 2017 was a good year for me, really great year. 2020, 21 were my best years ever. So it's like, well, you're kind of, you know, doing that. I think that's why it's important to trade all these different markets, because you're going to have trades that are looked just like that, and it's going to drive you insane. So if you're able to put together these other markets and you have these winners over here, you're not thinking about it as much. And generally that faith comes in where I'm like, I know my system works. I see it in all these different areas. That next trade that comes, I'm just going to take it. I don't care. It's a one. Also, I know that every trade is a 1% loser. So who cares when I'm looking at my other parts of my portfolio and I'm like, oh, those are all doing great. I have this 1% loser over here. All these other things are winners. And that's really trading. Like if I talk to anybody who's a very talented trader who's been trading a long time, that's their skill set. Their skill set isn't getting things right in the market. You know, you talk to really great traders that have really great returns for 40 years. They all say the same thing. You could fade my trades and make money. They say that all the time. Why do they say that? Because they're wrong so much that you could technically fade them and make money. But why can't people make money? It's because they don't have the discipline to do what they do. They don't have the discipline to take all those trades and go, I'm going to take all those trades. I don't give a shit. If I lose all that money, who cares? It's 1% of my portfolio. I know that my system works. I know over time I will make money.
So each trade is just another data point.
Yes.
In a series of data points, and that's it.
Yes. Yes.
Yeah. I like it.
And that's the most important thing I could say about it. All right, Ian. I know I don't want to take up too much of your time. Thanks so much for coming on, dude. This was a lot of fun. We got to do this again soon.
Always a pleasure.
All right, man. You take it easy.
All right. You too.
I could find the buttons.